Last year's picks outperformed the market big time, so we are back again to do it again for 2025. Hold on to your seatbelts, folks. This is going to be a good one. One of the best ways to add some excitement to the new year is to find some of those stocks that are ripe for some serious growth. Last year, we found some great ones with an average total return of 88.49%. That's a pretty high bar to beat. But today's list has some absolute bangers that may just be up to the task. I am excited about these picks, and there is some potential in some of them to really shine very bright. Nonetheless, you still do not want to skimp out on your due diligence, even with the success of last year's pick. One of them did underperform the market with a small 5% return. A sub to the channel guarantees you maximum returns on future content. To find these stocks, like last year, I leaned heavily on their return on equity values and insisted a minimum value of at least 20%. I do love my ROE. In addition to that, I needed a solid performance in 2024 with a bare minimum return of, let's say, 25%. That certainly narrowed my pool down a wee bit for sure. Of course, using fundamentals to nail down those 2025 picks alone, I don't think it's going to get the job done this year. I did have to rely on, market and geopolitical trends to help filter out a few interesting plays. In other words, the new American administration did factor into a couple of these 2025 selections. I'm pretty darn sure once I reveal them, you should be able to figure out which ones. In fact, let me know in the comments which two picks you think they are. I'm kind of curious to see if you get them right. So, without any further ado, let's do this. Kicking off this list, we have PHX Energy Services with a ticker of PHX. They are based out of Calgary, and they provide drilling services to oil and gas producers across North America. At the time of recording, their current price was coming in at $9.57, and I think they've got the smallest market cap on today's list, 434.91 million. They have a pretty volatile beta, 2.30, so that of course means they are 2.3 times more volatile than the market average. Their earnings per share coming in at 1.54, and they've got a price to earnings ratio of 6.19. That return on equity, 35.82%, nothing wrong with that. Their return on assets, 8.94%. Looking at their debt to equity ratio, in a spot I love, 25.99%. So they don't have a ton of debt. That's another plus for sure. Looking at their dividend, they have a yield of 8.466%. It's a quarterly dividend of 20 cents per share, and the payout ratio on that is 51.95%. Looking to their returns, on their 3-year return on investment, that comes in at 104.49%. Factor in those dividends, that bumps it up nicely to 144.02%. On their 1 year, that return on investment comes in at 17.42%. Total return after we add in the dividends, 27.24%. Now, if we look at their 3-year annualized return, it does come down a little bit, 34.63%. This is a company that is in a very good position if the new Trump administration does follow through on increased drilling promises. In fact, with a more favorable energy market in the second half of 2025, this will be one to watch for sure. They also have one of the better dividend yields on today's list, which is not too shabby at all. Coming in at number 4, we have Hammond Power Solutions with a ticker of HPS.A. They are based out of Guelph, Ontario, and they design and manufacture custom electrical dry-type transformers used in utility, industrial, and commercial applications worldwide. I will also add that this is the only company from last year's list to repeat this year. In fact, they were number 1 last year, so that's pretty cool. At the time of recording, their current price was coming in at $125.33. They've got a market cap of $1.49 billion, and their beta, not too shabby, 0.83. Their earnings per share coming in at 5.70, and they've got a price to earnings ratio of 21.94. Their return on equity, 27.71%. That return on assets, 14.15%. Debt to equity ratio, 13.21%. So once again, not very much debt. And you guys know I love that. When we look at their dividend, they have a yield of 0.888%. It's a quarterly dividend of 27.5 cents per share. Payout ratio on that, nice and low, 14.91%. Looking at their returns, their 3-year return on investments coming in at 962.12%. Factor in the dividends, a total return 378.31%. Holy banana bread. I love that. Love that. Totally. On their 1 year, that return on investments coming in at 59.05%. Factor in the dividends, total return 60.29%. When we look at their 3-year annualized return, it's pretty impressive as well, 120.93%. This company is a niche player in the power and magnetic space, potentially benefiting from the long-term trends of electrification and grid modernization. What that boils down to is that they have more potential customers than they can handle, and that's not a bad place to be for sure. Taking our third spot, we have Galaxy Digital Holdings with a ticker of GLXY, based out of New York. This is a company that invests in and provides access to digital assets, cryptocurrencies, and blockchain-related financial services. At the time of recording, their price was coming in at $29.45. They've got a market cap of $10.06 billion. Their beta, probably the most volatile on today's list, 3.15. They have an earnings per share of 4.69 and a PE ratio of 6.28. That return on equity, oh boy, 61.32%. Bitcoin has had an incredible year, and anybody dabbling into crypto has pretty much followed suit. Their return on assets, 53.57%. Debt to equity ratio, you can't get better than this, 0. When it comes to dividends, well, they don't have any. So this one is dividendless. Let's just get to those returns. On the 3-year, that return on investment, it is a little low, 34.23%. Total return, of course, the exact same number. If we look at their 1 year, yeah, it gets a lot better. That return on investment and total return, because they have no dividends, 191.01%. Looking over their 3-year annualized return, now this one is a little low, 10.31%. This company will do very well, provided the Bitcoin and crypto markets remain strong. I do think they more than likely will perform well deep into 2025. This one does have some potential for some very big gains, but, and here's the caveat to that, if the crypto market begins to slide before the year is out, this may be a ride you want to get off of. But in my opinion, it could be a fun one to ride until we get to that point for sure. In our almost top spot at number 2, we have Propel Holdings with a ticker of PRL. They are based out of Toronto, and they provide online consumer credit solutions primarily in the United States. Remember that. That's kind of key. Their price comes in at $36.90. They have a market cap of $1.27 billion. Their beta, a little on the volatile side, 1.75, and they have an earnings per share of 1.66. That price to earnings ratio, 22.23, and their return on equity, 38.77%. Return on assets also looking good, 15.08%. This one does have a big debt to equity ratio at 197.01%, but the fact that they are in the financial sector and that they do lend money, yeah, they're going to. That's their business model. So they're like banks. You got to have that debt to equity ratio. Looking at their dividends, they do have a yield of 1.651%. It is a quarterly dividend of 15 cents per share. Payout ratio on that, 31.41%. Looking at their returns, on their 3-year return on investment, it comes in at 218.10%. Factor in the dividends, 229.48%. On that 1 year, the return on investment, 191.47%. Factoring in the dividends, 195.73%. When we look at their 3-year annualized return, that's coming in at 48.80%. With the U.S. economy maintaining strength, this is an ideal situation for increased adoption of digital financial products, and they are more than ready to take advantage of this over the coming year. And that, of course, could be very good for their investors. In our top spot at number 1, we have Celestica Incorporated with a ticker of CLS. They are based out of Toronto, and they provide end-to-end supply chain solutions, including product design, engineering, prototyping, fulfillment, and logistics. At the time of recording, their price is coming in at $139.95. They've got a nice looking market cap of $16.28 billion. Their beta, 2.23, so they're 2.23 times more volatile than the market average. That earnings per share, 4.54, and their price to earnings ratio coming in at 30.83, and that return on equity, 21.22%, return on assets, 5.51%. Looking at their debt to equity ratio, 51.72%. This one is our second one on our list today that does not have a dividend. Looking at their 3-year return on investment, and of course, the total return, because they don't have a dividend, 941.29%. Oh boy, that's pretty good. On their 1-year return on investment, still pretty impressive, 273.20%. When we work out their 3-year annualized return, that is also a nice looking number, 118.37%. That's not too shabby. This company is a global electronics manufacturing powerhouse that's steadily pivoting towards higher margin segments like, of course, aerospace, defense, and health technology. With an agile supply chain, diversified customer base, and strategic focus on complex value-added solutions, this one is positioned for profitable growth in the coming years for sure. These are some great stocks. In fact, I already have one of them in the 0 to 100K challenge, and I may have to add more. Nonetheless, I will be watching these ones this year with great interest for sure. If you are interested in any of these stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey and check out this video on Canoe EIT, and I will see you in the next video.